Have you ever wondered whether Subpart F is better or Guilty is better? In this video, I will guide you through various examples to show one is preferable over the other. And of course, in real life scenarios depends on facts and circumstances and whether it's possible to structure one over the other. Guilties is often better than Subpart F when there's no FTC limitation in the guilty basket or there's no USTI limitation because it's allowed for the 50% deduction under Section 250, even though there's 80% FTC limitation. Let me show you an example where guilty is preferable over Subpart F. Let's assume there's an US parent owning a CFC and has a million of guilty inclusion and 100,000 of Section 70 gross up. You would calculate gross inclusion for guilty starting with a million plus gross up of 100,000 get you to 1.1 million. Then we would apply Section 250 deduction of 50% to get to a guilty inclusion of 550,000. And guilty FTC is haircut by 20%, so then the FTC is 80,000. Guilty tax affected is 35,500, which is calculated as 550,000 times 21% reduced by the 80,000 of FTC. Now let's assume that instead of having guilty inclusion, the CFC has Subpart F inclusion. You start out with a million the same way as guilty at Section 70 gross up of 100,000 and get to gross Subpart F inclusion of 1.1 million. The difference here is that we don't get the 50% 250 deduction. And the Subpart F FTC is at 100%, which is 100,000. The Subpart F tax affected is 131,000, which is 1.1 million times 21% reduced by the 100,000 FTC. In this example, you can see that guilty give you a less tax, which is better and preferable over Subpart F. This example shows that Subpart F is much better than guilty. Same facts as the last one, but US parent has 2 million of NOL, which costs the taxable income of the US after inclusion is zero. And under the guilty inclusion or a guilty scenario, the guilty inclusion is still 1.1 million, but because we have taxable income limitation, we don't get the 250 deduction. So the guilty inclusion is still at 1.1 million. And then to make it worse, FTC is limited, so there's zero FTC. And under guilty rules, you cannot carry forward this FTC, so it's lost forever. So the tax affected for guilty is a 231,000. Now let's switch over to Subpart F. The gross inclusion is still 1.1 million, but we get to use the Subpart F FTC of 100,000. So the tax affected for Subpart F is 131,000, which is much better than the 231,000 under guilty. FX gain or losses from hedges can be structured as guilty or Subpart F, depending your facts and circumstances. If you don't have guilty FTC limitation or USTI limitation, it is best to structure as guilty inclusion because you get the 250 deduction. And the way to do this is to specifically identify the hedges as bona fide hedges transactions. And once they specifically identify, they can be treated as related to trade or business and can be excluded from Subpart F.